2026-02-21-0700 SGT Americas. Markets and macro. U.S. equities were choppy across Feb 19 to 20 as investors digested Fed minutes that showed a more divided committee on the timing of rate cuts, alongside a geopolitics-driven bid for oil and gold. A widely anticipated U.S. Supreme Court ruling striking down broad Trump-era tariffs landed with a relatively muted immediate market reaction, but it reopened questions about the medium-term trade policy path. Mini-story 1. Fed minutes plus tariff ruling reset the policy mix narrative. The Feb 19 Fed minutes pointed to a split. Some officials argued for patience given inflation and labor market cross-currents, while others left the door open to easing if disinflation resumes. Markets still lean toward at least 2 cuts by year-end. On Feb 20, the Supreme Court's tariff decision removed one near-term tail risk, but did not materially shift rate expectations, leaving the next inflation prints as the key swing factor for risk assets. The intraday tape reflected that uncertainty. The Dow and S&P 500 were modestly lower, while the Nasdaq was slightly higher around midday on Feb 20. Mini-story 2. Capitalist expands into secured financing. Capitalist announced it will acquire 20 Gates Management's U.S. secured financing platform to expand its capital marketplace. Europe. Markets and macro. European equities pulled back on Feb 19, with the Stoxx 600 down about 0.6% and the Euro Stoxx 50 down about 0.8%, as investors balanced mixed earnings with higher oil and U.S.-Iran headlines and a higher-for-longer undertone from Fed minutes. The euro traded weaker, while Italy's BTP bund spread widened modestly. Mini-story 1. Airbus misses and Italian utilities react to tax changes. Airbus was singled out as sliding sharply after missing forecasts. In Italy, utilities such as Enel, Terna, and Snam were cited as falling as investors reacted to new corporate tax hikes for 2026 through 2028. Mini-story 2. Europe's strategic energy assets. The European Commission approved Germany's acquisition of sole control of Rosneft Deutschland and related assets, clearing a key hurdle as Berlin reshapes ownership and control of sensitive energy infrastructure. Middle East. Markets and macro. There were no standout new Middle East central bank policy announcements in the captured window. Instead, price action was dominated by rising U.S.-Iran tensions. Oil traded at elevated levels on fears of disruption, while gold hovered near the $5,000 area. Mini-story 1. Credit and sovereign risk framing. Fitch argued Middle East credit is resilient, even with the prospect of lower oil prices, pointing to expectations of robust regional growth in 2026. S&P Global likewise set a stable baseline for Middle East sovereign ratings into 2026, despite geopolitical and oil price volatility. Mini-story 2. Deal flow context. While no fresh past 24-hour M&A prints surfaced in the search results, recent reporting continues to anchor the region's deal narrative around 2025 megatransactions, including OMV and Borealis acquiring 64% of Borouge for about $16.5 billion, and other large UAE-linked transactions. Asia-Pacific, including Australia. Markets and macro. Australia remained the clearest macro story in the Asia-Pacific readout. The RBA's February statement on monetary policy pushed up its inflation track, with inflation projected to peak around 4.2% in mid-2026, while GDP growth slows below potential from late 2026. NAB flagged a path toward a cash rate around 4.1% by May 2026. Mini-story 1. Australia policy and household transmission. The RBA's narrative is explicit. Stronger demand and capacity constraints have lifted the inflation outlook, while unemployment is projected to drift higher as policy leans against inflation. Summaries highlighted that energy bill relief of roughly $300 to $450 in subsidies ended on December 31, 2025, while other cost of living measures shaped the 2026 consumer backdrop. Mini-story 2. Australia earnings season. Zip was reported as missing first-half earnings estimates and guiding to flat growth in the second half, triggering a share price drop of more than 34%. The takeaway for investors is that guidance quality and the assumed rates path matter more than simple beat or miss headlines, especially for leveraged consumer and fintech exposures.